Hello everybody, this is Okpe. Welcome to my Forex trading course. If you are new to this channel, we've been talking about candlestick pattern on the previous lessons. And the main thing of studying the candlestick is that the candlestick is the language of the market. Every tribe, every country has its own language. They have means of communication. So the candlesticks communicate to us what has happened in the market and what is likely to happen the next. Because as they say, history repeats itself. There is nothing new under the sun. Everything that happened before will happen again. So the only difference might just be innovation. So same thing applies to forex trading. What has happened in the market before will happen again. So that is why we study the candlestick patterns. Look at these ones. You have the 3 white soldiers. You have the 3 black crows. You have the 3 inside up. You have the 3 inside down. If you are just joining us for the first time, please make sure you like this video, subscribe to my channel, and click the notification bell so that when I post a new video, you'll be able to get the notification. And if you want to get access to the previous lessons, you can click on the link in the description below, so you get the other lessons. As you can see, this is lesson 12. I have lesson 1, 2, 3, 4 up to 11. So you will get them there. Now let's start. The 3 white soldiers. The 3 white soldiers. This pattern is formed when 3 long bullish candles follow a downtrend, signaling a reverse has occurred. A reversal has occurred. This type of triple candlestick pattern is considered as one of the most potent bullish signals, especially when it occurs after an extended downtrend and a short period of consolidation. The first of the 3 soldiers is called the reversal candle. It either ends the downtrend or implies that the period of consolidation that followed the downtrend is over. For the pattern to be considered valid, the second candlestick should be bigger than the previous candle's body. Also, the second candlestick should close near its eye, leaving a small or non-existence upper wick. For the 3 white soldiers pattern to be completed, the last candlestick should be at least the same size as the second candle and have a small or no shadow. Now, what are we talking about here? The 3 white soldiers is a bullish reversal pattern. So, and what happens? 3 candlesticks appear after a downtrend, after an extended downtrend. Look at it here. This is what all the stories I was talking about the other time. This is it here. See, there was an uptrend, a downtrend. Then suddenly, the first bullish candlestick appeared. It engulfed this. Then a second one appeared, bigger than the first one. and the close is not far from the high. What does that mean? It has a small shadow. It must have a small shadow. It must not have a big shadow. If it has a big shadow, especially if the shadow is bigger than the body, that means it is invalid. Then the third candlestick, the bullish candlestick, is bigger than the second candlestick. So this is what we call the three wise soldiers. This signifies that a reversal has happened. If you were selling before, it is time to take profit. It's time to close your trade and enter the next and enter a buy trade. So especially if it occurred, not especially, it must occur on a support area, especially a major support area, a major support. So once it happens there, that means a reversal has taken place. It is time to buy. So that's the three wise soldiers. The next one is the black crow. The black crow. The three black crows. The three black crows candlestick pattern is just the opposite of the three white soldiers. It is formed when three bearish candles follow a strong uptrend, indicating that a reversal is in the works. The second candle's body should be bigger than the first candle and should close at or very near its low. What does that mean? The shadow must be small. The close and the high, the low, they must not be too far from each other. Meaning the shadow must be very small. It must be small. It must not be too big. If it's too big, that is invalid. Finally, the third candle should be the same size or larger than the second candle's body, with a very short or no lower shadow. This is it. This is what I've been talking about. And see, the first candlestick. Before that, there was an uptrend, and it got to a resistance, and this happened. A bearish candle occurred and engulfed the bullish candle. Another one occurred, a bigger one with a small shadow. Then the third one happened, bigger than the second one. It has to be bigger than the second one to qualify as three black crows. So once this has happened, that means a reversal is possible. So if you were buying, if you were buying before, it's time to take profit or close your trade and sell. So this is what we call the three black crows. The three black crows. And this pattern, the three white soldiers and the three black crows, they are rare to see in the chart. But when you see it is a very potent signal. Very potent signal. And the third one, the three inside up. The three inside up candlestick formation is a trend reversal pattern that is found at the bottom of a downtrend. This three candlestick pattern indicates that the downtrend is possibly over and that a new uptrend has started. For a valid three inside up candlestick formation, look for these properties. Number one, the first candle should be found at the bottom of a downtrend and is characterized by a long bearish candlestick. The second candle should at least make it up all the way up to the midpoint of the first candle. Then the third candlestick needs to close above the first candle's high to confirm that the buyers have overpowered the strength of the downtrend. See what I was talking about? Look at it. There was a downtrend. Then suddenly this occurred. The first, sorry, this is the first candlestick. A bearish candlestick. Then after that, a bullish candlestick was formed, and it must close at the midpoint of the first candlestick or above the midpoint. If you can remember, this can also be called an Harami pattern. Harami candlestick pattern. So it occurs inside three inside up pattern. Then the third candlestick must close above the high of the first candlestick. This is a confirmation that the three inside up is valid. So this one tells us that the sellers are no longer in control. The buyers are taking control. So if you were selling before, it's time to take profit or close your trade. Then it's time, because it's time to buy, because buyers have taken over. So the next one, this is the three inside down. Conversely, the three inside down candlestick formation is found at the top of an uptrend. It's just the opposite of the three inside up. It means that the uptrend is possibly over and that a new downtrend has started. A three inside down candlestick formation needs to have the following characteristics. Number one, the first candle should be found at the top of an uptrend and is characterized by a long bullish candlestick. The second candle should make it up all the way down the midpoint of the first candle. Then the third candlestick needs to close below the first candle's low to confirm that sellers have overpowered the strength of the uptrend. Look at this. This is it in a diagram. Firstly, there was an uptrend. Price was going up. Then we now have this. This is the first candlestick. This is also a Harami pattern. Then the second candlestick occurred. It was formed. This is a bearish Harami. So if you can remember when we were talking about Harami, the other in the three inside up too has a bullish Harami. The three inside down has a bearish Harami. So the first candlestick is bullish. The second candlestick is bearish, but small. Then the third one now confirms that sellers have taken over. Why? Because it must close lower than the first candlestick. Must close lower than the first candlestick. So that is to prove to you that a downtrend has occurred. So if you were buying, if you had a buy trade, it's time to take profit and sell because sellers have taken over, especially if it happens in a support zone, a major support zone. Sorry, resistance. 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 So must be in a resistance zone. Resistance is the one up, while support is the one down. So when we get there, when we get to support and resistance, you will know more about it. So you know this support and resistance that I've been talking about. So if you are if you like my video, please click the like button, subscribe to my channel, and hit the notification bell so that when I post the next video, when I post the next lesson, you will be able to get the notification. See you in the next lesson.